All right, welcome back, YouTube. So I'm officially not sick. This is what I would consider roughly like 100%. So I'm definitely capable of making videos again. So for those of you who've been following the post and me on X, I made like the announcement I wasn't feeling well. So excuse my absence. But now we're going to get an update here. We're going to take a look here at some of the macro events, and then of course we're going to take a look at the charts. So right now, and I made a post earlier today. I was saying there's mass fear in the market, things on the macro events, the CPI data, the tariffs. There's mass uncertainty, right? And for those of us who've been in the market for a while, you know that uncertainty leads to fear, and fear means that not necessarily people aren't going to invest, but the money is going to be pulled out and it's going to sit on the sideline. So right now, yeah, puts are printing like crazy, and the people who are long on the market, which I believe most people are, you get to get those long positions for incredibly cheap. And this isn't specific to crypto or anything like that. This is stock market. This is things like Tesla prices right now. I'm loving it. SPY prices, NASDAQ, all of these things. SPY and NASDAQ, which are negative. I have to check the where they closed at, but earlier today they were negative year to date, which was very interesting. So massive fear in the market here, and we've seen this in crypto as well. So even from like a few of the bigger exchanges here, long liquidations are almost, or not even almost, they're over 2 to 1, right? So 3.7 to 1.5 here, long liquidations on this is for Dogecoin specifically. We can do long short ratio. Let's see here. We have on the I'll say some of the smaller time frames here, 5 minute, 30 minute, 1 hour, we're looking at 76 to 23. So we're seeing the short ratio nearing around that 20%. So there's two signs to that, right? So when you see the short ratio start falling below that, typically like that 3 to 1 where this normally rest at, unless we have like massive fear or massive greed. What this means is shorts believe that there's kind of like a comment. They're technically taking profits. You have that swapping going back into some of the longer positions because they believe that we're going to get a bounce, and we'll take a look at that on the charts here in a moment. Because technically, if we don't really maintain the level that we're at now, we're actually in a position where we can get a gap to actually go a little lower. So to like a little deeper into the teens, but we'll cover that in a moment. But what we're looking at here, when we see this get near around that 20% mark for the shorts, this is going to be increased volatility, which is what we're seeing. We're starting to see now, right? So we'll start to see like this will become like the swing traders playground where we're bouncing around between that overbought, oversold, and we'll start to see not necessarily that flattening where we'll be at, let's say, 25 cents for 3 or 4 days. We'll have these swings for like 20 to 25 or 23 to 25. There's a few cents, but percentage wise, the swing traders, they'll be able to eat and kind of like jump in and do like their scalping and all that. So there's something to kind of look forward to. I want to switch over here to the charts. Give me 1 second. You should be able to see that. Okay, so this is what I meant, right? We have filled the gaps here the gap ups that we got around November 10th and November 11th. We've filled those, and we are right here at around that 19 cents mark. The important number here is around that 19.48. But what we're looking at here, since we're filling gaps, this here is not a very strong support level. Just want to put that out there. We do not have a lot of buy and sells here, at least on the daily. We did not spend a lot of time here. This is where we were cusping off of gap territory. And technically speaking, we had 2 rallies that led to the red day that we did get here back on November 7th, right? And we did have a major push up to around like 21 cents from was it around 17 cents, and that was the daily candle, but we pushed down to around 19. So what we're looking at here is a fall. If we do not hold around this 19 cents level, we're looking at around 16, 17 cents, right? And that is, and I'll say it was good because that was the second time we had tested that. I'm looking at back here in between like mid-October to early November. And that 19 cents, excuse me, that 17 cents level was a level that we had to test a few times before we broke through it. So actually, the 17 cents is actually a stronger support range versus where we are right now. So something to kind of keep in mind. I know we're hovering around 20 cents right now, but if we do not maintain this level, especially around that 19 cents, we're going to be looking at around 17 cents, where there were more buys and sells, more pools of liquidity in that range. So that's something that we're going to have to kind of look at as far as for gathering support to kind of push forward. So we're going to take a quick look here at Bitcoin, then we're going to talk about what we need going forward. So Bitcoin, this is and typically around the 200-day, this is where it becomes Bitcoin in specific and becomes like a no-brainer to buy. So typically a lot of liquidity starts to come in at around the 200-day moving average for Bitcoin. So this is where we're at now. And again, same thing, we've given up a lot of those gains that we've had over the last couple of months, similar to what happened with Doge. But again, the sentiment here is going to be, we need to look at some of the macros here before we can talk about moving up or getting some of those bigger pushes overall in the market. Now, I do believe that the cycles, we talked about this earlier last year. I'll say around this time last year, it's probably about a year ago, we talked about the potential of cycle changes and whether or not I believe we were going to have like a traditional run. And we talked about the fact that altcoins ran with Bitcoin, and technically speaking, if we're looking at cycle trends, they were running early, and the belief that because institutions were coming into the market and creating these ETFs and taking and businesses and these funds were taking these large positions in crypto, that we're going to transition away from that 4-year cycle. And I do believe that's happening. I do believe that things that we call like alt season and all that, I believe a lot of things that we talked about last year, the potential of it happening, I believe that we're watching it unfold right now. Now, any of the other percentages that we've seen here, are they an anomaly where we haven't seen these types of sell-offs before? No, we can take a look back at around 2017. We've seen things like this. This is not an anomaly here, but I do believe the catalyst surrounding like the economy and where we are now and the uncertainty is quite different. So what we're looking at here, I believe we need some certainty in the market, right? So that's going to come from things like CPI data, how these tariffs are going to affect the economy, the role institutions are going to take playing into the market. Are they going to continue to hold these positions here? But when there's uncertainty in the market or in the stock market, is the crypto market going to be where they raise cash at to put back into the stock market, or are they going to hold these positions here and sell bonds, or are they going to liquidate stocks, or do a combination of the three? There's a lot of uncertainty as far as for what happens when the market panic and where that capital is going to come from, what is going to be the main points of interest here now that we have the broadening of the market between the stock market and the crypto market. There's going to be a lot of I'll say fine tuning of the market going forward. And I think that plays a part in what we're seeing here. So overall, I don't believe that we're headed into a crypto winter. I just think that we're in a period of uncertainty, and the market is doing typically what it does in uncertainty, which is panic, and we have red days. I don't believe that we've peaked in the market. I don't believe the stock market has peaked for this year. I don't believe the crypto market has peaked for this year. I just believe that we're in a period of uncertainty. And because of the timing of the uncertainty, and it's like, well, technically this is supposed to be a peak a bull run right here. So in the market, and there's uncertainty in there, and the market going down, this is it. It's over, guys. See you in 4 years. And I think that's kind of like the sentiment that's going on. But I don't necessarily believe that is the truth that's underlying here. I believe that we have a transitioning of the cycle, but I do believe things are going to smooth out, and we're going to see all-time highs here for crypto and the stock market for this year. So like my tone hasn't changed just yet. I just believe that we're in a period of uncertainty. If that does change, because things can certainly shift on the macro and those things can change. Obviously, we'll talk about it here. But as of right now, that is what I believe is happening overall. So let me know your thoughts in the comment section. I know we haven't talked in a while, so let's get that conversation going. Let me know if you think that we're just in a period of uncertainty, or if you think that we have maxed overall and we're about to have this major correction throughout the markets, not just crypto, the stock market. We're just about to have this major pullback, and we'll have to wait and see what that recovery looks like. So let me know what your thoughts in the comment section. So if you found value, as always, please consider liking the video, sharing with a friend, and subscribing to the channel. I appreciate all of you, and I'll see you guys in the next one.